The oil and gas space. Yes, the federal government has charged international oil companies to reopen and start work on dormant oil wells, saying it is determined to reach its production target. This is as the Apex government revealed that Nigeria's oil and gas industry is experiencing a renewed global investors' confidence, with rig activities reaching decade-high levels and production in the rise. Now, the Minister of State for Petroleum Resources, Oil, Senator Heineken Lokpobiri, spoke at the Nigerian Oil and Gas Conference and Exhibition Week, tagged NOG 2025 in Abuja, which was monitored by us. Of course, we even deployed a reporter to that event. Senator Lokpobiri explained that the government's determination to increase oil production was why President Bola Tinubu had directed the NNPC to review all existing FTSAs, that's financial and technical service agreements. He said the IOCs should consider embracing the same review, as according to him, the era for dormant oil wells is over. Well, let's start our chat today with Dr. Chinan Dikwal. He is the Vice Chairman, African Energy Council. Good afternoon. I mixed up. I was saying you were from Dakar, where you are in Doha. How are you today? How is Doha this afternoon?
Yeah, it's a good afternoon, Tolu. It's a pleasure to be here. Sat right here in Doha.
How is Doha today?
Rather warm, quite warm actually, and quite dusty because it's summer months, but generally okay. It's
been cold here, rain in Nigeria. Well, let me start with oil prices that we've seen a mixed bag in what we've seen today with regards to the price of crude and what OPEC and OPEC Plus is talking about. Tell us how that comes to you as we get into our main conversation.
Yeah, Tolu, I mean, it's a very, very interesting one at the moment. So many people would recall that on Saturday, 5th of July, OPEC Plus, held that meeting. There was a lot of fanfare, or we're building towards that meeting. They held that meeting, and the clear resolution there is that for the month of August, the month coming up, they would hike production by 589,000 barrels per day. Now, just for context, OPEC Plus has been on a spree of increasing production since April of this year. So just so people know, in the month of March, they increased production by 411,000 barrels per day, the same in the month of June, and the same for the month of July. And right now, we're seeing a bit of an increase, 589,000 barrels per day. What they are doing is they're rolling off cuts that they made before, between 2023, when they were trying to stabilize the price of crude. So now they're putting all of that back onto the market. As you'd see there, Tolu, with all of that volume coming to the market, is showing some market weakness. So we saw the price of Brent came down rather a tiny bit. Today it's about $68 per barrel. But to be honest, I think in the short term, we expect, just given a lot of the geopolitical situation and all that's happening in the market right now, we expect that the downside risk potentially would increase a tiny bit. So oil at $65 per barrel over the next few weeks, I don't think it will be out of place. I don't see it, just like many of the investment houses are forecasting, I don't see oil at $70 per barrel in the short term, except, of course, if the geopolitical situation in the Middle East really deteriorates and you start to have some blockages, then I think we would start to see oil going significantly above that.
But we've seen a bit of de-escalation, ceasefire and all of that. Are you still thinking that anything could pop up at that end? Because I was also worried at that time where there was likely going to be a blockage. And if that had happened, some said crude oil prices could have hit, some say even $100 per barrel.
Yeah.
If that happens, for countries like Nigeria that we have deregulated, what does it mean for us? High price.
Yeah,
high price.
Great question. Two things you asked, Tolu. First of those, is the geopolitical situation de-escalating in the Middle East? Absolutely. There's a lot of calm right now. Look at Gaza as an example. Look at the situation in Iran as well. A lot more stable right now. In fact, yesterday, Ayatollah Khomeini came out for the first time, showing a bit of confidence again in that space that things are quieting out. But don't forget, Tolu, we just got confirmation now that the US is starting to negotiate with Iran again. So they're back onto the negotiation table around the non-proliferation agreement for nuclear. If that happens and a deal is struck, then I can tell you this for a fact. that Iranian barrels that have been on sanction and have been off the market will get back into the market. If that happens, again, there's a downside, risk on that front. But to your point, without a doubt, I think when you look at the Middle East situation, everything seems a bit calm, at the moment, which I think is a good thing. But 100%, if the situation escalates by any front, if anything does happen, and we're having a blockage, let's say in the Strait of Hormuz, for the sake of argument, where 20% of global crude goes past, then you can expect that we would see oil, I think, probably above $100 per barrel. But generally, I think at the moment, things appear quite stable. The only thing I'd say for your viewers to bear in mind is, don't forget, 3 months ago, Donald Trump put that pause on tariffs, the 90-day pause for tariffs for negotiation. That expires on the 9th of July. So today is the 7th, next 2 days that expires. We need to keep a close eye on that front. For some of the countries that are not able to hit a deal, then there's potential that they revert back to the old tariff in April. If that happens, again, there's a huge problem because we'd have supply disruptions. Supply disruptions mean a destruction of demand. Destruction of demand means, a low oil price scenario. But to your other question, if oil goes to $100 per barrel, then without a doubt, in a fully deregulated market, there'll be a lot of pain in Nigeria because there's no cushion. There's no subsidy cushion. So that will be translated straight to the customer.
I'm already seeing flip-flop in prices. Well, let's move deeper now into the NOG conference, which you also attended back here in Abuja, Nigeria. I'm concerned about the fact that government is now so interested in IOCs to open up all dormant oil wells. This production target of 2 million, above 2 million, is it achievable? And what do you also make of this directive to IOCs to open our dormant wells?
What I would say is, if there's anything that you give to the Bola Ahmed Tinubu government is huge ambition. And to be honest, that ambition, we have seen some of that happening already. Already we're 30% in terms of crude oil production since the last 2 years. So I think that's very commendable. Now, beyond that, there's a target, and don't forget, the initial target was 2 million barrels per day, yes. And then the president again hiked it up to about 2.5 million barrels per day by the end of 2026. So, it's super ambitious, but I think there appears to be some sense here. I am a student of this oil and gas industry. I have been in this space for a long time. I can tell you this for a fact. For the last 10, 15 years, we saw very little investment. We saw very little dollars, flow into the market, into the Nigerian capital space. A lot of it because the PIA was held in limbo. Now with the passage of the PIA, with the executive order, the first we've seen around tax incentives, with the executive order we saw around, by President Bola Ahmed Tinubu, around the local content, with the executive order we saw around cost efficiency, which is the new one, we've seen a flurry of new dollars that were sat on the sideline waiting to come in. A lot of those tax dollars have started to come in. And we've seen huge investment. Bonga, the FID taken by Shell, Bonga North. We've seen, Seplat making investments and commitments up to $15 billion, making commitments. We've seen Total around USAN, deepwater development USAN. And recently, we are just seeing, in fact, you mentioned the NOG. I was right there when Komolafe, the executive director of the NUPRC, was talking about 28. Believe it or not, at the moment, they have approved about 28 field development plans, FDPs. They've approved 28 field development plans with a huge amount of development drilling. I think about 72 new wells, development wells that we need to be drilled, about 19 extended well tests. All of that in the Delta, something we haven't seen before. So to your point, the directive to get IOCs to reopen dormant wells is all tied to that. And honestly, I will not bet against it. I think 2.5 million barrels per day is probably a tall order, but I think 2 million barrels per day is well within reach. And if we consistently drive this investment coming in with new wells being drilled, in fact, just for context, Tolu, this month, OPEC released a report. Our rig count, the number of active rigs in the Delta, went from 37 rigs to about 44. So that's, again, a positive sign. If this continues to happen, I think we can easily smash 2 million barrels per day, possibly by end of 2026.
There's a lot of activities, I think, going on around the upstream, basically, at this time. Well, talking about investments, and the drive through government, executive orders and all of it. Do you still think that looking at the continent, that Nigeria is still remaining so attractive for investments now in the oil and gas industry? Are we still attracting the needed investment? Can we do more, in your thoughts?
I'll tell you this. We go back, so I'll take you to, let's say, 2014. Pre-2014, Nigeria was the undisputed champion when it comes to upstream oil and gas investment. In fact, I would say this. Pre-2014, the total investment dollars that would come into Nigeria year on year was about $20 billion per year. 20 billion, so very significant. Post-2014, so when we had that supply crash, when we had the oversupply and the crash, Nigeria took a massive backseat all the way from 2014, 2015, I would say, just after Egina, the Egina FID. We saw very little investment coming into Nigeria all the way to where we are right now. I'd say probably 2024, if you like. We're just starting to see. So in that intervening period where we lost the crown as the undisputed champion when it comes to investment, we've had a few basins take that over. I'll give an example, the Orange Basin in Namibia. Namibia 4 or 5 years ago was nowhere. Today, when you say investment dollars, Namibia is one of the preferred places for investment dollars, for new dollars. That's happening. Still very small compared to Nigeria, but for sure, it's taking investment capital. I'll give you another example. Another basin that's seen a huge amount of capital inflow since when Nigeria took a backseat was the MSGBC basin. That's around Mauritania and Senegal. It was nowhere before. We've now seen the Greater Tortue project, the LNG project being commissioned there. We've seen Birala. We've seen, several projects, that have come up around that. And all of these came up when the PIA stalled. So, you can argue. But without a doubt, today, with the new executive orders that we have seen, the new tax incentives, the new cost efficiency executive order, and the local content one, it is spurring new investments. And people who have left are starting to come back. We're seeing renewed interest, even from oil service companies who have left all of those wells abandoned in the past. Many of them are starting to come back.
We also see that the Nigerian gas flare commercialization program is attracting investment too. But for me, I would say it's been a while I've been hearing about ending gas flaring. Do you think we are also ready for that now? And looking at our gas master plan and all that is being done around gas, do you think Nigeria is ready to, take advantage of this natural resource that we're blessed with?
Without a doubt, gas is a big thing. We are starting to, I think we've talked about it way more than, the effort that has been put down. The gas commercialization plan, I think, is a positive thing. It hasn't quite, without a doubt, it hasn't quite yielded the result that we wanted to. But I still think it's a positive step. We've seen several new companies and innovation that's come into that space. People are capturing that gas and utilizing it in a way that's very innovative, which I think is good. But I'll say this, even from the NOG, a huge focus has been on gas, the decade of gas. And if you look at President Bola Ahmed Tinubu's executive order, there's a particular segment of that deals entirely with non-associated gas. So Tolu, you would know this. Most of the developments we talk about, all the capex are saying, the capital injection that's been coming in the last few years, has mainly been in terms of oil, because that's the commodity that most people want to see. The new executive order for non-associated gas targets reservoirs, it targets developments that are strictly gas-based. And it's so powerful and so important, because if we can commercialize gas and turn it domestic, then, that would hugely drive economic activity and economic prosperity, because all of a sudden you take energy to the population. And I'm saying that in the context of the AKK pipeline. You've seen that, Tolu. The Ajaokuta Kano pipeline. He said, I think something like, it's probably about 80% complete at the moment. So that pipeline, that massive trunk line, will take gas all the way from the Delta, all the way to Kano, with several spurs all around. And that will distribute gas across the basin. Another pipeline we should think about is the OB3 pipeline, runs west to east. So all of these things are huge things for the Nigerian, economy that are meant to open it up and provide gas domestic. I'm not even talking LNG right now for export. I'm not talking gas for export. I'm talking about domestic utilization. I think that's what's very exciting about it. So to summarize, I'd say this. Honestly, a lot of people could argue about the Nigerian economy and talk about, is it moving, is it not? I don't think that anybody who is in the oil and gas sector, if you're in the upstream oil and gas sector, on downstream oil and gas sector, it is not in question that we are seeing movement like we've never seen before.
Interesting stuff there. Movement like we've never seen before. The issue of pricing, again, let's come back to pricing now, to the downstream and logistics issue. I'm sure you're aware that very soon Dangote will be rolling out about 4,000 trucks, I think, LNG trucks into the market. And that has also generated reactions. For me, let me ask you bluntly, what will be your reaction to that, basically?
Listen, I'm a progressive. I'm a Nigerian progressive. I think anything that is around investment and it provides value for individuals, I would completely endorse. I completely understand the apprehension that many people have with regards to monopoly. You see, I mean, destruction of the midstream sector. I completely understand that. But honestly, I can't see the signs that, this leads to a monopoly. I'll say this without a doubt. You see, when Dangote refines his crude, let's say PMS for the sake of argument, and he sends that PMS, if it leaves the gate of his refinery and it gets taken in by the midstream system, which we have right now, the petroleum marketers and all of that stuff, as it were, it needs to then be taken all the way to the various places where they are, say, the north and south and all of this stuff. He doesn't have a lot of control from that point, from the gate of the plant. Now, the reality of it, because there's no control, pricing also becomes an issue, because the guy who is in Yenagoa or the guy who is in Sokoto and Yola, they'll be buying crude at a completely different price because of transportation costs, okay? And all that transportation cost is being passed on to the consumer. What he's trying to do is he's trying to control the entire thing end to end. And honestly, I don't think there's any problem there in terms of competition, okay? He takes it from the gate, his trucks take it, and they're CNG trucks, by the way, so they're super efficient and super cheap. So I think that's the hack there that people are missing. These are compressed natural gas trucks, okay? They will do a huge number of miles on very little gas and also super cheap. So by the time it hits Sokoto, the price differential from how you took it from Lekki to the man who's buying in Sokoto will be very small. So I'll say this actually, in any venture like this, Tolu, I'll say this. There are winners and there are losers. In this particular case, with the 4,000 trucks, the winners here are the ordinary people in Sokoto, in Yola, in Yenagoa, and Calabar. The ordinary man would buy petrol not at 1,200 naira per litre. He'd probably buy petrol at 850, at 890, maybe 900, and just above. Okay, because the cost of transportation will come down. The big losers here, without a doubt, and it's something that we need to think about as well, are the midstream marketers. Okay, the depot owners and all of that. And I completely understand that. But bear in mind, these are middlemen. These are middlemen who sit within the system. The question there is, what value do they add into the system? I think it should be a situation where they should be allowed to compete. They should go and compete in the same way as he is putting the 4,000 trucks. No government mechanism should be used to exclude anyone out of the market. So these are my thoughts. They could be controversial, but the reality of it is I think we should look at the general population as opposed to a select few.
It is indeed controversial. I don't really want us to stay on it, but really you agree. A lot of reactions from all quarters. Some guys have invested so much in the transportation and logistics business. They are scared that they could be sent out of business. But let's wrap up with your outlook for the entire market, considering all that we've seen, positives along the Nigerian line, and of course, the international circle, how it affects us, the geopolitical issues that we are also not isolated from.
Yeah, so I'd say the big one for us, when I think geopolitics, the big one, honestly, I'd say is around oil. Reason for that, much of our foreign exchange comes from there. 70%, I think, 90% of our foreign exchange comes from there. 70% of our earnings comes from there. So anything that touches that is a huge, huge, huge problem. So there are a few things that we need to bear in mind, I'd say. The first of those is the negotiation with Iran. If Iran hits a deal with Donald Trump, I can tell you without a doubt, would have additional barrels that would come onto the market. That additional barrel means we'll be in an oversupply situation, price will come down. Our fiscal budget for 2025 is based on $75 per barrel of oil, okay? So if we're at $75 per barrel oil, and today we're 68, you can see there's already a deficit there. I'm just talking today. I'm not even talking for the remainder of the year, just today. There's already a deficit there. So it's something for us to think about very especially. What does that mean? Are we going to have to borrow to finance that budget? What's the strategy? Is there a hedging strategy in place? I'm sure probably the Ministry of Finance would have some sort of a hedging strategy in place. But the reality of it is that's the biggest shock that we should think about. Now, that's one. That's the biggest risk. The other thing I'll talk about is the opportunity. You talk about risk, let's talk about opportunity. The opportunity here could be, and I think what we've seen the last 5 months, okay, of the new US government is that there's huge amount of volatility, okay, and things are really uncertain. We need to think about the opportunities that may arise out of a situation where things really escalate. Now, in such a scenario, my question, I suppose, is how does Nigeria capitalize on that situation? In a situation where gas is disrupted, for the sake of argument, let's say gas supply or LNG supply into Europe is disrupted. How does Nigeria capitalize on that to make sure that it's at the front seat of supply? In a situation where the oil price goes to $90 a barrel, how does Nigeria ensure that it's at the front seat to make sure that it takes advantage of that? What are the mechanisms in place? So I think these are the things that we need to think about. It's not simply about the risks that's down there, the downside risk. I think the opportunity that it presents as well is such an important thing that we have to think about. I'm sure Minister Wale Edun and Atiku Bagulu, Planning Minister, all of these, I'm sure they are really looking at this very interestingly.
Interesting chat as always. Dr. Chinan Dikwal, Vice Chair, Africa Energy Council, joined us live from Doha in Qatar. Thank you and do have a productive week. I appreciate this.
Thank you so much. Thanks for having me.
All right then. Well, still to come on the show.